Hello and welcome to Livewire's Buy, Hold, Sell. I'm Selby and today we're talking all about quality. From 1981 till 2022, the MSCI Quality Index outperformed the MSCI World Benchmark by around 2.6% per annum, while value and growth styles pretty much returned the same as the broader market. So is the trend your friend? To find out, we're joined by Junbei Liu from Tribeca and Daniel Moore from IML. There's obviously a lot of different definitions out there about quality. I want to know what our guests think. Junbei, I'm going to start with you. How do you define quality and what factors are important?
Look, quality companies have very strong business franchise and they have very strong track records. So many years of delivering consistent growth for investors. Now, quality company have good management team and they don't surprise investors, either on the good side or on the bad side. Good quality company delivers really good return on equity, as well as have very good pricing power. Now, good quality company knows when to use pricing power, don't abuse it, and however, it will complement their long-term longevity of their growth.
Okay, over to you, Daniel. How do you define quality?
Yeah, so for us, a quality company has an enduring competitive advantage, and hopefully that is improving over time. We also like recurring cash flows in a business, so consistent earnings as well. Quality management teams, as Junbei said, we want honest management teams, we want passionate management teams that are really intelligent about their business, and a strong balance sheet is also really important.
We've obviously seen growth outperform in recent times. Why should investors consider quality companies right now?
I think while growth stocks have done well, there's also a lot of froth in the market around certain themes around AI. So I think being disciplined and staying invested in quality businesses is still really important. To avoid, I guess, the lower quality businesses, which when the heat comes out of the market may fall away, is really important as well.
Okay, when do you feel like the heat could come out of the market?
Timing's always a really difficult thing, but I guess if interest rates were to rise or not fall as expected, that could be a catalyst. If the CPI prints are higher than it predicted, could be a factor, or there was always left field things as well. It could be geopolitics as well. It could be a number of things.
Okay, over to you, Junbei. Why should investors consider investing in quality companies right now?
Look, I think, honestly, I think investors should always be investing in quality companies. Ultimately, it's a good quality company you want to buy, and you want to buy the growth. For me, a quality company needs to have growth. You need to have that longevity of the continued expansion of your profits, and also reinvestment into your people and business. So that's the quality company. So I think they will always outperform, and you should always invest in those. Growth at any price is very dangerous because the flavor comes in and out, and investors can be left with a lot of losses.
Daniel mentioned before that there's a little bit of froth in the market right now. How do quality companies tend to perform in times like these?
Look, during the frothy times, the quality companies can be left behind somewhat, and this usually is a great opportunity actually for investors to rotate, buy more of those businesses, because they're always followed by a very strong period of outperformance, following this. So this is a great time to be looking at those companies, particularly some of them recently, really investors sort of chosen the higher growth, the growth at any price sort of stocks than those ones.
Are these companies safe? What risks should investors be aware of?
Look, generally, when they qualify quality company, they're reasonably safe because they keep investors up to date with what's happening. They've been delivering growth year in, year out. So generally, they're pretty good. But I think the risky is that how do we define some of the quality company? Because some of the companies simply they've been growing, and we assume they're quality company, but they're not. And then they miss on earnings, and the share price can fall quite a bit. And generally, quality companies are more expensive. So because it's hard to get quality. So when they do miss on earnings or when change of management, something happens, here you can get punished when these things change.
Are there any other risks you want to bring up?
Yeah, I think high valuations mean any company is susceptible to falls if they've got really high valuations. And probably the best history of that was the Nifty 50. So if you go back to the 60s, we had these great quality businesses trading around 50 times earnings. And they fell 50% in 2 years in the early 70s. So even the best quality businesses can be vulnerable if the price is too high.
Okay. Everyone knows I love a little bit of spice, a little bit of drama. So I'm going to ask you to name a quality stock or a stock that the market thinks is high quality that you think actually isn't.
What I'm going to do is maybe categorise some things. So what I'll say is, I think every cycle there's themes that are really hot. So around COVID there was buy now, pay later. I think a lot of people thought those stocks were high quality, particularly the larger companies, and probably weren't. A year ago, it was lithium, and a lot of people thought a lot of those lithium companies were very high quality companies. That probably proved they weren't. And more recently, there's some AI businesses, which I would say probably aren't as high quality as some people think.
I'm going to push you for a stock.
Sure.
Can you name a stock?
Yeah, so a stock in the AI space, probably BrainChip. Lots of people think that's a high quality business. It loses roughly $60 million US a year, probably, and it's pre-revenue, so probably not quality from our perspective.
Okay, over to you, Junbei. What's a business that the market thinks is high quality, but you think maybe isn't?
Look, I'm happy to be the villain here, but I'm going to name a company that everyone thought is a high quality company. That's James Hardie. Look,
really?
To be quite frank, I just had a look, clearly company just had a really poor result and poor guidance, and share price fell quite significantly. I just look back to its company's history. Out of last 11 years, this company missed 9 of the 11 results. Now, the share price most of those times fell quite a lot, and then eventually recover. I will give to James Hardie. It's a growth company. It's done very well, growing all of that. But a good quality company don't keep investors in the dark, especially bad news. And that is just a missing 9 out of 11 result. It's really just a sign that the management are very bad at expressing bad news to the investor, but good at telling the good news. So for me, it's good quality management. Don't keep investing in the dark. Tell them when things are going slow and keep them on track rather than throw the surprises to investors. And some investor may have bought right before result and sold on, and then they don't know as a minority shareholder what's really going on with the with this business. So I think it's there's a lot more to be done with business like that, and it's a shame because it's been growing really fast for many years and now just hitting a bit of a headwind.
Okay, that was two wolves in sheep's clothing. Let's talk about businesses that are actually high quality on the ASX. Junbei, I'm going to start with you. What do you think is the highest quality large cap and small cap on the ASX?
Look, the highest quality, actually there's many of them, but I'm going to name the highest quality large cap is Pro Medicus. This is a company has grew literally not very long ago, a small cap into the large cap space, and has continued to grow. It is at the moment, it's in the imaging space. Software help the imaging department within hospitals to remotely view the imaging, and it's really just got 7% of the market share there in the US, and now just taking share incredible speed, and the company itself, the software is AI native. It's been used for a lot of training program. We just think this company has incredible amount of leadway, and it's very profitable, very high return on equity. It will be our number one pick in the space.
And how about a small cap stock?
Look, this small cap stock I've been talking about it before on this show as well. It is Lovisa. It is a company that has a great concept and that has proven to be very successful within Australia, and then it took it to overseas and has proven to be very successful in capturing the market share over there. And the rollout has been quite incredible. They're in the US and also now just started going to Asia, and this company will deliver very good growth for the many years to come.
Okay, over to you, Daniel. What do you think is the highest quality large and small cap stocks on the ASX?
So for large cap, has to be REA for me. Brilliant business. Leader in the online classifieds fields for real estate, has delivered earnings growth around sort of 14-15% per annum for 10 years. Brilliant business. They put up their prices almost 10% a year, and no one really bats an eyelid. So incredible franchise. And then small caps, I think this one is probably SupplyNet, and this is a business that reminds me a lot of Reece. It's a distribution business like Reece. In the sort of aftermarket for truck and bus parts. It's got a fantastic distribution network. It has a customer base that isn't that price sensitive. They earn really great returns, so in the 30%, and it's growing really fast.
Okay, so we had Pro Medicus, Lovisa, Supply Network and REA Group. I hope you enjoyed that episode as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding so much great content just like this every single week.